So Sri, let's start with this Renaissance Technologies story, because I thought this was interesting. I assume that RenTech would have to be one of their most premier clients. I don't know exactly where they rank, but the fact that they're pulling money seems to say a lot.
I mean, the way you should think about it is, if you're a giant hedge fund right now and you're seeing all the news coming out of Deutsche Bank, if you're not thinking about doing this, then that would be a surprise. So RenTech is obviously one of the largest prime brokerage clients for Deutsche Bank, and prime brokerage falls within the equities division. And we've all seen the scary news that's come out of there. So obviously it makes sense that for the last few months they've been thinking about pulling their money. They have been pulling their money, placing it at different places. But it's even more interesting because there is a bit of a history between RenTech and Deutsche Bank. The COO at RenTech right now used to run the prime brokerage unit at Deutsche Bank for several years before he joined RenTech. So if that relationship can fray, then you know things must be a little difficult.
And this really kind of speaks to why, when you're doing a restructuring, you should kind of get it done fast, I guess, if you're a bank, because it's just out there and everyone's been talking about woes and troubles and reductions at Deutsche Bank forever. In the meantime, why would you stick around for that? I
mean, to be fair to Deutsche Bank, I think the timeline has been accelerated because of all the noise, because of all the pressure. And remember, this has to be one of the most difficult restructurings in all of finance since perhaps the financial crisis. Right. In September 2008, we had about 26,000 jobs lost in Lehman. And with Deutsche Bank, we could see as many as 20,000 jobs lost if the restructuring proposal is accepted by the board. That is more than a fifth of their workforce. That's not going to be an easy process, and there will be a lot of scrutiny on them.
So in addition to clients potentially looking for some alternatives, we're also seeing some really high-level employees. They're also looking for alternatives. We got the news today that Garth Ritchie, he was the head of the investment bank, right?
Right.
And he's departing.
And Garth Ritchie is the first big casualty. He's been with the firm for more than 20 years, but he's not been a fan favorite in the last few months. Let's make that clear. He's been the head of the investment banking division. That's where most of the pressure has been. He's also one of the highest paid employees at the firm, so he certainly didn't have the backing of the investors. But another window into this is, look at the statement they put out when they announced his resignation. They said other leadership changes in investment banking will follow in due course. That tells you how we should be looking at the whole situation. He's gone, but we're expecting a few other high-profile names to leave. Among the speculation, we've had the chief regulatory officer, Sylvie Matharat, being talked of as someone leaving the firm, the CFO possibly leaving the firm. It's going to be a bit of an ugly process over the next few weeks to months.
And this weekend, just to back up, this weekend is going to be a big weekend, right? Or it's expected to be, right?
Absolutely. Sunday is when the board meets, and so everyone on the street is expecting starting Monday, the official news starts trickling out. Leading up to this, the last few weeks, we've all seen reports across the financial news media about what kind of changes could happen, but starting Monday, it becomes official, and that's where we will see which divisions see the cut. Obviously, the talk has been within the investment banking division. How much did they pull out of equities business, their rates business in the US? The fear is it could be deeper than some imagine right now.
And this has to be hard on a lot of the employees. I mean, we're already getting a lot of anecdotal stories from our Bloomberg reporters here about just kind of the mood, particularly in some of the U.S. offices.
And it's understandable to many extents, right? If you just look back a little bit, 20 years ago, Deutsche Bank sort of embarked on this big Wall Street mission. This goes back to Anshu Jain in the mid-90s, building Deutsche Bank into this derivatives powerhouse, the acquisition of Bankers Trust, where they thought they could go toe-to-toe with the likes of JP Morgan and Goldman Sachs. It's a very different reality today.